Good morning, folks. I hope you are well. So, I didn't make a video yesterday because I had a lot of things to attend to, including a webinar to attend within our Falcon community. But I am back today, and I'm back with two pairs. Those are Euro Kiwi and Dollar Yen. I've just shifted a couple of pairs off of my watch list that have kind of look a little bit less ready now, okay, and look like they're developing something a little bit deeper. But without further ado, let's break these pairs down for you. So I would argue that Euro Kiwi is my favorite of the bunch. So if we just zoom right out for a second, you can see that we have tapped into a significant high here, a high that is visible even on the monthly chart. We even have, just analyzing some of these things on the fly, we even have that 1, 2, 3 wave there, where the 1 and the 3 wave are of a similar length, which again, as I said in a previous video, implies a completion of a move. That doesn't always mean that we're going to reverse from the area. If a move is completed, it could be that we're moving to the downside, or it could be that we now need to build more volume up here, for example, for the next wave higher to perhaps tap into those. But obviously this is the super higher time frame. Regardless, we have the 1, 2, 3 that taps into the area. You can see we've pushed down with aggression now. Okay, as we zoom down to the weekly chart, you can see that we got the very big doji there, the very big indecision candle, but then we followed through with aggression, and then we're clearly moving to the downside to perhaps take out this low, especially as this low narrowly missed the retest at the back end of that. As I said, when price narrowly misses something, there's usually a zone of orders in there. People who got long there may be stops in this area. Okay, so just analyzing this all on the fly. As we zoom down, you can see that we've had, even on the daily, we can see this impulse correction continuation, impulse correction continuation. So now it's just about trying to ride this wave, okay? And we have another gap there that I like. We have a near miss to here, okay? When people get long there may be a zone of orders in this area that are yet to be tapped. So how do we ride this wave down to this area? Let's zoom down and see if we can analyze this. So we have, in a previous video, I didn't have this on watch at the start of the week, but excuse me, I said in a previous video last week, I believe it was, that Euro Kiwi was particularly notorious for, or not notorious, good for expanding patterns. Okay, so when we get the higher highs within the structure and we get the lower lows, price tends to commit on Euro Kiwi after those, and that's exactly what happened. Okay, it's just a characteristic of this pair. So as we drill down, so that is a completed structure in my experience. We don't have the middle section so much within there, which we typically see, but nothing happens all of the time, as I say, and nothing happens none of the time. So if we just zoom down a little bit more, you can see what is price doing. If you notice a similarity here with what happened before, price is often repeating itself. So we have the completion of the structure here. Okay, we then have this bit of a running channel. Okay, price drops out of the running channel and leaves a footprint. Okay, so this is one piece of its own, this is one piece of its own, and this is the footprint that was left after price broke out of this running channel. Okay, how do we know that that's likely where the volume is? Well, look what we've done. We near missed the area, came up here, we near missed to it. If people got short here, where are they likely to have their stops? Above here, especially when this high failed to retest. So we've got all of this volume here, okay, and we've got a low here which narrowly missed the back end of that. Okay, what happens again? We come back up, we near miss to it again. So if people got short here, they're likely to have their stops. Some of them will be above here, okay, especially if they believe that this is now resistance. Okay, what's price doing? Shock horror, price is gravitating back towards most likely where those stops are to give us another expanding pattern. Exactly what we saw here, just on a slightly smaller degree. And we have, to some extent, we have that kind of middle section now. Okay, price has tapped the low. So what I'm going to be looking for is, I do like this setup. I'm going to be looking for So I've literally just amended my criteria slightly. So previously I was looking for the 1 hour structure, but if we just zoom out a second, if we were to get up to, hold on a sec, what am I doing? There we go. Right. So the first question I asked myself is, what is the highest time frame to determine my entry requirements? What is the highest time frame that I can see this structure on? I can't see it on the daily. However, I can see the lows on the 4 hour chart. And if we were to push up to here, I would be able to see not so much the area of value there. Okay. But I would be able to see the highs, these highs. So if we got up to here, I'd be able to see the high that we'd created plus this high plus the two lows. So this is now a 4 hour structure in my book. Okay, not a larger 1 hour structure anymore. So because it's got slightly larger, that's amended my entry requirements ever so slightly. So what I'm going to be looking for is, let's just change that slightly because that should say area of value. There we go. So if we get a corrective tap into that area of value, okay, not too much momentum, then I will be looking for a 4 hour risk entry. So a 4 hour rejection, a rejection on the 4 hour chart, or 2 1 hour rejections. So 2 1 hour high tests, or a 1 hour high test and a retrace candle, a combination of either of those things. Or if we get there, if we get there very impulsively, let's say in one solid candle, then I'll be looking for, wouldn't be looking to catch a falling knife or the reverse of a falling knife. I'll be looking for a push down followed by a little continuation like that. And then in both instances, I'll be able to manage it down to this low here, okay? And then I would be targeting down there for something in the region of 6% or slightly less with the other pair, with the other entries rather. Because why would I be targeting there? Because this is a sharp move. Okay, we have a very sharp move there, which instigated, or which was the inception of this move. And if you look at this move, there was very little pullbacks. So we had a very aggressive move all the way up to there. Okay, and we also note, so there's likely volume there. And especially if we just measure this range, okay, doing this roughly, that is roughly the 90% area of this overall range. And as I've said in previous videos, that tends to be, even if price is going to take out this low, or these lows here, that does tend to be where price can pull back deep. So we may get the tap in. Whoops, it was a bit high, but come down to here, we might get to that area and pull back quite deeply. So we can often pull back 50% of the move before committing, and then that way I'm not sitting through too much pullback if I set a take profit at that low. Okay, so that's what I would do, and I would trail my stop loss at the same time. So that is Euro Kiwi. We shall see. This looks like this may be a trade that's ready on Monday, for example, because what we might get is we might get the move up here. Price might consolidate sideways for a period of time, right, to give us that 1, 2, 3 last leg. Then we tap into the area, and then this pair involving the Kiwi could be ready kind of Asian session Sunday night, okay, or we might get there because it's Euro Kiwi. This could be ready like London session Monday morning, but we shall see. We shall see what happens with this pair. But unless we get to that area of value, I'm not interested. I won't be placing a trade. So this one is dollar yen. So dollar yen, I am mindful of the fact that we have tapped into an area of significance here. So this is one of the reasons this is lower on the list for the shorts, okay, because we do have a sharp move here, which instigated a very, very big move, as I've just said on the other pair, with very little pullback all the way to here, okay? So there could be a lot of volume here. And if you look here, we have responded from that area because we didn't tap into that area. We broke below here, washed out the liquidity, and have pushed up aggressively, okay? So we could be moving to the upside, okay? But this structure here is giving me the indication that we're not, okay? But we do have to factor in a few things. So we do have, I do like this sequence, right? So we have this move down, correction there, which has the middle section in it. We tap the high, push to the downside, price comes up, okay, leaves a footprint there. And notice how this footprint, if we just analyze this on the fly, I believe, yeah, it's ever so slight, but it narrowly misses the back end of this. As I've said previously, that likely means that there's orders sat just above. We tap ever so slightly above by way of an expanding pattern, and we move to the downside. Price creates another footprint, okay, which is likely where the volume is. Yes, we didn't sell off aggressively from this area, but look how much volume we've built. So a lot of the time the moves are either sharp or where the volume is, or they're the origin of a corrective move like that, okay? How do we know that that's likely where the volume is? Well, because yes, technically we tap the low of this structure. I just want to check something. Yeah, I'm just looking at something there. We technically tapped the low, but we didn't break above. And if you look what price is doing now, it's moving up. It keeps near missing to this area, particularly this one, but it's moving up in the form of a reversal structure, potentially, right? So if we were to tap into this area by way of a reversal structure, like, tap into where the volume likely is, then it's highly likely that we could be moving to the downside to take out this near miss here, which near miss to here, okay, the origin of all of this move, okay, which would make contextual sense. However, what I won't be doing, okay, what I won't be doing is I won't be looking for a risk entry from the top here. And you might be thinking, why? I won't be looking for a risk entry from here, so trying to call the top, as it were, because I'm still factoring in the fact that we technically have tapped below here. Just take that off a minute. We technically have tapped that low there and pushed to the upside. And also, this is a key point as well, we've come from a move up. So yes, we technically have a reversal structure, but it's come from a move up, okay? So when it's come from a move up, this could be a running channel, okay? So we end up with something that looks like a reversal structure. We tap into this area, you get tagged in, potentially tagged out. Price does something like that, and then this, it moves down correctively, and then this becomes a reversal, running channel to push to the upside because of the fact that we technically broke below that low that I was just showing you and broke back above it. Okay, technically we've tapped that and pushed up, and because we've also come from a move up. Okay, so these are key differences. So if it was, for example, if we hadn't come from a move up, and let's say we had something like this, okay, we had something like that, then I would be more inclined to look for the risk entry because, we've not responded from that area with aggression, but we did respond with aggression. We had an aggressive move up, which moved into a correction. So this could be, okay, we have to remember that impulse correction continuations, even though it looks like a reversal structure, okay, we could get something like that. We could respond from perhaps this low, or if we move down correctively from there, this could be just the impulse correction continuation to push higher. So what I'm doing is I'm looking for a tap into this area, the area of value, as I've got it marked, and then I'll be looking for just a small continuation afterwards. If we do push down with aggression and then we consolidate sideways, I mean, this one looks the most likely to be ready. Dollar yen, this could be ready at sort of lunchtime UK time when the New York session opens. If we get that, we tap into the area, push down and consolidate, then we could be seeing a move. We could capitalize on a move down to there for something in the region of 4.5%. And then I would target this low here because my minimum requirements where take profits are concerned is 5%. So I would set the take profit there, okay, for something in the region of 8%. And as I said, that area is typically where price can pull back deep, because it would be, if we just measured this, yeah, that would be about 90% of that range. So what I would do is actually set the take profit just before that area, and then that would give us something in the region of 8%. So I hope you've enjoyed this video, folks. That is my forecast for today. Again, it's not a forecast, isn't what I think will happen. It's what I'm going to do if the market does what I anticipate that it might do. Okay, so there's quite a big difference. I'm not predicting, I'm forecasting what I will do in these particular scenarios. And if these particular scenarios don't shape up, then I'm not going to be looking to place a trade. Trading is very, very simple when you keep it that black and white. But anyway, folks, have a great day. Have a great weekend, and adios, amigos. I'll see you next week with another video.